So let's talk about what's in everybody's head right now. Well, gold. And why are gold prices fluctuating so much? I mean, just some weeks ago, gold was breaking the charts. It was reaching to over $2,000. And Nepal was no less. In Nepal, it reached a staggering 1 lakh rupees and more. Well, today we make an effort to describe what could be the reasons for this kind of gold prices fluctuations. We will describe some critical factors that are responsible for gold price hikes. Well, let's start with basic economics. And you must have guessed it right. Let's talk about the law of demand and supply. Well, price determination is just a basic economic theory. The price of any commodity like flour, oil, or rice is dependent upon the demand and supply of the commodity. You can see on the graph here, the demand and supply curve has set a price P for a commodity. The theory is same for the gold as well. It means the demand and supply of the gold sets the price of the gold. But unlike flour, oil, or rice, gold is not a product that can be consumed. Gold needs to be mined, which takes a long time. And currently due to lockdown, the mining activities have drastically reduced. This has caused the supply of gold to sharply fall. The shortfall in gold mining has reduced the gold production, and thus the gold export and import has drastically reduced as well, which has contributed to the reduction of the supply of gold. Now, what happens here is this has caused the supply curve of the gold to shift to the left. And when this happens, there is another equilibrium point set that brings the new price P1. And you see that right here, P1 is higher than the P, which shows that whenever there is the reduction of supply, then there is the tendency of the price increment. So this is one of the major reasons why the gold prices are rising. It's because the supply of gold has sharply reduced, so the price of the gold is ever rising. Now let's talk about another major cause called inflation. Well, inflation means a general rise in the price level of the economy. Why is inflation being talked about now? It's because of the impact of COVID-19. After lockdown, the world market is collapsing. Why? Because the production, supply, and trade of goods and commodities have decreased, and sadly, it has decreased a lot. And when the supply of the goods decrease, we all see that there is a tendency of shift in supply curve, and then the price level rises, which causes inflation as we described earlier in the video. If you're confused, let's take an example of mask. When the lockdown started, the demand for the mask showed up, but the production of the mask was constant, so the supply became quite less as compared to the mask demand. And the situation got so worse that the supply was very less as compared to the mask's demand. This is why the prices of the mask rose. And suddenly, the masks that cost rupees 10 increased to rupees 30 in a week's time. This is an example of this is the example of price rise after lockdown. Now just imagine this for every single product that you consume. Many industries have been shut. The export and import businesses have been shut. And there has been shortage of all kinds of goods and services. Even if the demand of the product is same, the supply of the product is very low as compared to the demand. This is why there is price rises or general rise in the price level called inflation. And whenever there is price rise or inflation, the value of the money decreases. Like taking the example of mask, the rupees 30 that could get you 3 masks just sometimes in the past, now that will get you only 1 mask. And this validates that the inflation reduces the value of money. Also, at this point of time, governments have raised taxes. They have been naming it as a stimulus package that is a measure to increase the income of government to make responsible expenditure in controlling COVID. Taxes have raised the government revenue so that health infrastructures and other capacities of the country can rise, so that the taxes is aimed to back the economy. But taxes have also contributed to the price rise. That means with taxes, there is the rise in inflation rate. And as we told, inflation decreases the value of money. It means any investments that you have made on your stocks or any returns that you have made on your bank interest will not have the same value. And sometimes this interest rate cannot even beat the rising inflation rate. For example, if you got rupees 30 as dividend on your stock, when you could buy 3 masks, you can only buy 1 mask now. That means your returns have become less valuable. Now, as there is inflation, people think it's better to invest on something else that will always have the same value and is considered precious. Well, yes, the item is gold. And gold is a precious metal. It is a very scarce commodity and it has high value in the society because people think that anyone with a large amount of gold is a wealthy person. This is why people tend to buy a lot of gold, something that has constant value, something that is precious, something that makes you feel rich. And it's not only some, a lot of people do that, which causes the demand of the gold to rise. And with the rise in demand, there is a rise in prices. So the inflation rate is also one of the major causes why the gold prices are rising. Gold is that's why considered a hedge against inflation, which means every time the inflation rate rises, people tend to invest on gold, and so the gold price rises as well. Now let's come into the factor number 3 of the gold price rising, the spread rate or the interest rate. Now, the bank's income is the spread. Well, spread is the interest rate on loans minus the interest rate on deposits. Let's say it's the bank's profit. Now, you must be seeing how banks are reducing their interest rate on loans. You have also been seeing a lot of advertisements on the Facebook pages where they have been advertising their loan products everywhere. The banks have to reduce the interest rate on loans so that people can get loans at a lower rate, and in these times of crisis of money, they can get funds at a lower cost to continue production and consumption, which is considered very healthy for the economy, by the way. But what you have missed here is when the interest rate of loans reduce, the bank's income reduces as well. That means banks are either reducing their profits, which rarely happen, or they tend to reduce the interest rate on deposits as well. Well, they have to reduce the interest rate on deposits so that they can maintain a certain level of profit. Sad, isn't it? The interest that you were earning by keeping your money in the bank has reduced, or it will reduce very soon because bank will not compromise on their profit for very long. They need to sustain as well. This means you might get lesser returns by keeping your savings at a bank. Now, you might think to invest on shares, but the profit of the institutions are declining. And because of inflation and uncertainty in the market, the investment in shares, bonds, or lending the fund to someone is considered risky. You might also think about investing on real estate, but you need to have a lot of bulk amount to invest on real estate. So what can people do? They cannot keep their funds at their bank. They cannot keep the fund at the stocks. They cannot keep it at the locker because that would just be missing the opportunity to earn. So yes, they tend to invest on gold, a commodity that hedges against inflation, that is considered precious, it carries social status as well. And again, it's not only you. A lot of people start investing on gold, causing the demand to rise, and slowly the prices of the gold will rise again. So the interest rate affects the gold prices as well. So there is also another clear factor to cause the gold price rise. Let's talk about our neighbors for a while. Yes, India. India is the 4th largest importer of gold, but the Indian rupee has fallen sharply since the lockdown. And such exchange rate fluctuations heavily impact the gold prices in India. Well, it's because they have to pay more to get the same gold because the Indian currency has devalued. And that is why gold prices are rising in India. Now, how does this affect us? Well, it's because NRS is pegged with INR at 1 INR equals to 1.6 NRS buying rate. So due to the fall in INR, the NRS has fallen as well. And the cycle for India is the same for the cycle in Nepal. Now, as India have to pay more to get the same gold because the Indian currency has devalued, Nepal also has to pay more because NRS has fallen as equivalent to the fall in INR. So the gold prices in Nepal are rising here as well. So currency exchange rate is also a factor for the gold prices fluctuation. So yes, there are a lot of factors that determine the prices of gold. Gold prices may fluctuate in accordance to the above-mentioned causes like inflation, demand and supply, interest rate, and currency's exchange rate. Change in gold prices is a global phenomenon, and there are many other factors underlying as well. Nepal is just a small piece that got an impact for the world gold prices rate. So I hope now you understand why the gold prices have been fluctuating so much and what are the major causing the gold price fluctuation. Share what you have learned about the gold prices fluctuations with your friends and family. Like and share the video as well so that everyone in the circle will be informed about the gold prices that's making the hot news. Thank you for sticking by. We will soon come up with other informative videos as well. Stay tuned. Causes